Welcome everyone. Welcome to today's episode of Market Wrap. I have with me Mr. Pankaj Pandey, and this is going to be a special episode because it's not just a market wrap. This is बहुत सारी बातें चल रही है. Markets right now are so volatile. Everybody is wondering क्या होने वाला है. Has the fall been enough? Will there be a more fall? सब कुछ डिस्कस करेंगे, सब कुछ अनरैप करेंगे. So let's start from the top, sir. There has been a significant fall in the market. Portfolios are not happy, to say the least. What is happening right now, and how do you look at it right now?
Hi, good evening, Vishu. Yes, a lot of things are going on in the market. Before I jump to some of the specifics, last few days we've seen a rebound in the broader markets of 4 to 5% odd. Whereas Nifty has not done much. Top five stocks, if you look at, have hardly sort of contributing about 40% of weightage. They've hardly moved, and as a result, Nifty is there in the range of say about 50, 100 odd points. Coming to specifics, see, the biggest question in the market is that are we sort of near the bottom, given the fact that Nifty has corrected 14% from the top. You have 20% kind of a correction in mid caps. Small caps have corrected by about 24 odd percent. And the other thing is that we are already in the 6 months of sort of a decline, and how far or how many more months are expected to go. So while it is very difficult to sort of put a future perspective, but I think historical context is a good way to sort of look at some of these things. Primarily, if you sort of exclude the 2008 and 2020, because 2008 you had a financial crisis, we are nowhere near to a situation like that. And 2020 was a COVID year. Again, we really do not have a situation like this. Now, incidentally, when you look at the kind of a correction in the market or the time period of the correction in the market, across from say 2006, whether it is a large cap, mid cap, or small cap, the corrections have been in the range of about 7 to 8 odd months. So we are already about 6 months. So largely, bulk of the correction is behind us, and we would want to believe that we are closer towards the bottom. The other is in terms of price correction. Like I said, when you look at from a price correction perspective, typically corrections have been in the range of about 30 odd percent in the big index like say Nifty. Something is similar even in the mid caps also, and this I am talking from say 2006 onwards. And small cap, again, the corrections are a bit higher at about 35, 39 odd percent. So from that perspective, when you sort of look at overall, we are about 24 odd percent. So I would want to believe that we are not significantly way ahead or no major, or going forward, we are not expecting a significant fall in the market. The other thing is that while the corrections are done, what happens to the market 1 month down the line, 3 months down the line, or 6 months down the line? And typically, what we have seen is that once this correction is done, typically you see a appreciation in the market. So, for example, on a 1 month basis, typically you will see about say 19 to 21% kind of a appreciation in the market, so from a 1 month perspective. And in a 3 month perspective, this number ranges between say 30 to 38 odd percent. And in actually 6 months, it's quite rewarding from the perspective that the corrections are, or the appreciation is in the range of say 46 to 55 odd percent. That is what the data says from say 2006 onwards. We have taken 2006 onwards because see the rally had started from 2004 onwards, and the first correction happened around that time. So if you look at from that historical perspective, one I think clearly coming out is that the time correction is nearing to the historical maturity levels. Price wise, there could be some more pain, but overall, once you are sort of done with the correction, the next 1, 3, or 6 months are rewarding for the markets. That is one perspective which we are carrying. So our sense is that we are closer towards that bottom.
Absolutely, sir. Sir, one significant aspect of this recent correction has also been the behavior of FIIs. We have seen a lot of selling in the recent past. Could you shed some light on what has been happening?
So typically, the understanding on a FI perspective is that they would be operating in the range of say top 200 stocks. So Nifty 200 is a sort of a good universe to sort of look at. And when you look at the bulk of the selling started from October onwards, so they've sold. So October they have sold massively, then January and then February. So cumulatively, they've sold about 2.6 lakh crores, and what they've put it in the primary market is about 2 lakh crores, about 60,000 odd crores. So net, they've sold about 2 lakh crores. Now, one way to sort of look at is to look at from a sectoral perspective, which all sectors are witnessing the maximum brunt of that selling. And naturally, when you look at from a sectoral perspective, see the biggest sectors are BFSI, oil and gas, and that is these are the sectors where we have seen the maximum amount of selling. But to understand the situation where they are relatively sort of selling more compared to the weightage, I think that will sort of tell us the sectoral biases what they are carrying. So, for example, in a NSE 200, you will have a financial services contributing 31% by weightage. But what FIs have sold up till now is only 25% of their overall 2 lakh odd crores. So from that perspective, they're not negative, structurally negative on a sector like BFSI. It is such that it is one of the most liquid segments to sort of withdraw money, and that is why it is seeing a kind of a maximum impact. The other is the oil and gas. Now, oil and gas, the overall weightage is 8.5%. But what they have sold of that amount is about 24, 25 odd percent, similar to what BFSI. And which is why you see big stocks like, say, Reliance or some of the other names, they're not performing. So I think they are negative on a sector like, say, for example, oil and gas. The other is automobiles. Automobiles had done very well last year. Their weightage in the NSE 200 is about 7%, and what they've sold is about 14.5%. So clearly, they are sort of negative there in the auto as a space. That is the FI perspective, what we are carrying. Otherwise, in most of the sectors, they have been sort of selling in line with the expectation. There's some positives as well. So I think in terms of positive, there are segments like, say, telecom, chemical, or healthcare. I think these are the pockets which have bucked the overall trend of larger outflows. And in some pockets, we have seen inflows as well. So these are the pockets which can be construed as positive from a FI perspective.
Right. So indexes are kind of the litmus test for the market. So there were a lot of concerns when we were at our ATH that the markets have been extended, the valuations are not really cheap. What after this correction, how does it look now? Have the valuations become more reasonable?
So I think I'll come to the Nifty target. So at the beginning of this year, we had a Nifty target of 28,300. And what we have seen is that in this quarter, overall, since the earnings have been overall in line with the expectation, but the outlook is a bit more cautious because of the Trump effect or the tariff anxiety related anxiety. So there has been a cut of about 4% kind of in Nifty earnings. So from that perspective, we've also cut our Nifty target by 4%. So our Nifty target for this year is 27,000. Parallel levels for Sensex is about 90,000 odd crores. So while the index has corrected, say 14 odd percent, the earnings cut is only 4%. So obviously there is some correction in the P multiples as well, and which is what is there. And I think it's not only for this thing, but even for say a small cap index. Now, small cap index in October was somewhere on a forward basis was at about 21 times. Now this is down to about 17 odd, and we have already seen a 24% kind of a cut. See how the multiples get or P multiples get adjusted is one is the correction in the prices or the correction in earnings. The correction in the earnings is overall lesser, and whereas the correction in the prices is more. So which is why there has been a moderation in the overall P multiples. And I think with that in perspective, I think the risk reward is becoming a lot more attractive, be it for large caps and even for small caps, because, like I said, small caps have seen a cut of about 4% kind of earnings, like the same way the likes of say Nifty. And we've seen a 24% kind of a price cut. So from that perspective, even the small caps are looking attractive to us. And I think the overall sense is that, like I said, we are closer to bottom, and hopefully in a month or two, I think this tariff related anxiety also should subside.
Absolutely, sir. One more topic which has been coming up again and again, the union budget. Of course, a lot of expectations were placed there. There were a lot of, while one aspect we did discuss, there's has been a lot of focus on the consumer side and on the markets also. Consumer sides has become more important. But does this also mean that Capex stocks, which had become the favorite of retailers in the recent past, they are going to suffer because of it?
I think I think it is very important to understand why capex is important because see, India is one of the few countries which has a fairly young population. Now, to sort of provide employment to these younger generation, you need a lot more capex rather than sort of a consumption-driven kind of a template. So, from that perspective, I think capex is extremely required, and we would structurally prefer capex as a theme for the next 5-10 years, and that is what we have been preferring now, and that is also we will suggest. I think good part what we have noticed is that yes, there has been a lower capex in the recent past, and I'll give you some color on that. So, for example, last year, most of the year you had a capex of somewhere about 75,000 odd crores. So, I say I'm talking of a 9 month period, say from April to say December 2023, and something similar for 24. Now, in the entire April to December 23, average capex was somewhere about, say, 75,000 odd crores on a monthly basis, which is the central government capex. Now, that number sort of came down in the early part of, say, from the example, from April to, say, August. This number came down to about 60,000 odd crores. So, obviously, on a YY basis, since we had elections, extended monsoon, and a number of other things, state elections, so the capex came down to about 60,000 odd crores. Now, the highlight is that from there on, September onwards, things have recovered. And now we are hitting a capex of about 1 lakh crore on a monthly basis. In fact, for the month of December, the capex was 1.7 lakh crores. So, quarterly or monthly, we are seeing an improvement, and which is why it is giving us confidence that this time you'll see a lot more normal capex, given the fact that you have only one state election left now. And capex as a theme, while we have seen a good amount of price correction, yes, there was some higher valuations as well. But I think we have seen a good amount of correction there, and I think this is a theme we would want to prefer. And any kind of a weakness should be used as an opportunity to sort of buy this because, like I said, I think whether we like it or not, but capex as a theme is going to remain in vogue for a good period of time, given the fact that it's a very structural requirement of the society or our economy. And I don't think there will be any letting back in terms of capex from that perspective.
Going one level down, it's how about defense sector in particular?
Oh, yes. So defense again, so I'll give a historical perspective. So for example, there was a period, say, between, say, 2013 to 22. The acceptance of necessity is the first step. So during that period, the acceptance of necessity was given to a project worth about 5.4 lakh crores. So that is a 10-year kind of a horizon. Whereas in the last 3 years, the acceptance of necessity has been given to about 8 lakh crore kind of a project. Now, in terms of when you look at awarding of contracts, so last 10 years prior to, say, 2022, you had about 3 lakh crore worth of order being given. Now, in the last 3 years, you have already given 2.5 lakh crore, roughly something similar kind of order inflows. So while this is the historical data perspective, now our sense is that when you look at the recent comments from the defense secretary, what they are clearly sort of highlighting is that while the budget allocation is over 1.8 lakh crores, the secretary is clearly highlighting that we need to spend somewhere about $30 billion on an annual basis, which is about 2.5 lakh crores. And our sense is that government over the next few months, you are going to see a lot more ordering and tendering in the defense side, and which will sort of take off all the worries which have been sort of persisted in the recent past in terms of especially the related to the Air Force not delivering aircraft on time, or there has been a delay in awarding and tendering. So our sense is that we should be seeing a positive announcement there in the next few months, and that should sort of lift all the worries. And which is why defense, I think, any kind of a weakness in bigger players should be used as an opportunity to buy. On top of it, I think the Aero India show went well. I think there were some more positives. One, I think for the 110 kilonewton engine, you have even GE offering expertise there to DRDO. Similarly, there were other defense deals which are expected to sort of come up. And I think in the next few months, it is very much possible that we could be hearing about, say, three Kalaveri submarines. The order value is about 30,000 odd crores. Six next generation submarines, P75 odd project, so which is about 70,000 odd crores. So from that perspective, a lot of announcements are there. What we are clearly liking is some of the tier one names like say, HAL, Bharat Electronics, Data Patterns. We have come up with a recent buy, Astra Microwave. So Data Pattern and, for example, Astra Microwave, both are a play on ASAR radar, which is, I think, going to be there right from Tejas Mark 1A to a lot of other defense platforms. So I think overall defense has not done so well in the recent past, but the future is definitely suggesting a lot more brighter days.
Absolutely. Sir, let's get to the current week as well. I think one of the bigger announcements this week was a 25% tariff is being talked about from US on Indian pharma products. So how do you look at it?
So I think market is clearly saying that they are worried with that, and we have already seen the healthcare index correcting by about 6 to 7 odd percent. But I think it's easier said than done because imposing 25% kind of a duty would be a challenge. While India exports about 8 to 9 odd billion dollars, so about 30% of the Indian pharma exports go there. Now, India typically supplies cheaper generic medicines, and which is where I think these companies already work on very wafer thin kind of a margins. So practically looks unlikely that a 25% kind of a tariff hike is going to be absorbed by Indian players, and eventually it looks like it is going to be more passed on to US consumers if this were to sort of happen. And obviously, healthcare cost is one of the highest costs in US. So our sense is that this is. Actually, we need to also understand that Trump has been announcing a lot of these things. So not everything is a sort of an economic tool. It is more of a political tool. If you are able to even get some concession, so for him it becomes a good political point to talk to the population at large. But when you sort of come to business, I think somewhere down the line, this is something which is really not feasible from a mutually beneficially scenario perspective. So, which is why while the stocks have corrected, I think as and when the dust settles down, our sense is that things will sort of improve or for better for pharma. Again, preferred picks would be tier one players like say Sun Pharma, Cipla, and so these are the names. So I think something similar we are hearing in auto as well. But then again, also, I think it is very unlikely to sort of move the entire ecosystem. Say, for example, if it is residing in Mexico to US, while some can move, but not an entire ecosystem, and you can't be really producing at a similar price in US. So from that perspective, I think a lot of this is a political tool or a tool to sort of garner some benefit out of the trading partners. Not expected to dent or cause a significant dent to a sector like say auto or pharma, like we spoke.
Absolutely. Speaking of auto sector, it's being covered in the media that Tesla might be entering. So how do you look at that?
Well, definitely good for the overall ecosystem because you are getting a good high-tech player into the system if it happens. And now, so there is an expectation that, see, the government had come up with the EV policy. Now they will sort of finalize that EV policy. And broad contours were in terms of the kind of value addition you do within 3 years of your operation or 5 years. And then providing bank guarantees on top of it. They were allowed to import, I think, 8,000 vehicles at 15% duty, subject to a pricing of about $35,000 on a CI basis. Now, since is that the cheapest model for Tesla is somewhere about 40,000 odd dollars. So if you add about 15% kind of a duty, I think you are going to get the product at about 39 lakh. So while we have seen a correction in a stock like M&M, because this is one of the few companies which is at the forefront of EV, but our sense is that the real competition for Tesla is going to be more aspirational brands like the likes of say Audi or BMW or Mercedes, rather than say M&M, because somewhere down the line, I think the pricing point is going to be different, and these brands are more aspirational, like Tesla is. Good part is that India has got only 2% EV penetration. So while we are selling about 40 lakh vehicles on an annual basis, the EV vehicles which are sold is about 1 lakh only. So it's only 2% penetration we have got. So from that perspective, good part is that Tesla is entering into a market which is in nascent stages of electrification, unlike China, where the overall EV penetration is significantly higher. So yes, I think the ecosystem will get better, and as of now, we don't see too much of a damage to the existing listed players from Tesla's entry.
Right. And finally, we also had a result update on ABB India. So how does the picture look like there?
We need to understand that, like I said, Capex is something we are turning positive, or at least the data is turning positive. See, the challenge with big company like ABB has always been the valuation side. So for example, valuation have, if you sort of look at, it's at about, I think, 46 times on a CY26 basis. Now, when we never had the best of the capex cycle, even then these companies used to trade at a pretty rich multiples. So, which is why we feel that rich multiples are here to stay for niche players like ABB, and which is why we have recommended this stock as a buy. Now, coming to results, the results were good. We have seen top line growth of about 22 odd percent. Margins are one of the highest, has expanded both YY and quarter on quarter basis. PAT margins is also one of the highest what we have seen. So nothing much to complain except for the fact that on the ordering flow side, the base orders have grown only at about 4 odd percent. So that was the disappointment, and which is what led to sort of further correction in the stock. Now, overall sense is that company expects private sector capex to sort of increase in this year, and they are expecting normal order inflows typically from segments like say power generation, automotive, food and beverages, data center, railway. So from that perspective, they are expecting decent set of capex to sort of pan out. So no alarming signs, at least from the ABB's numbers or the con call or the commentary. So which is why I feel that rich multiples are here to stay, and the stock has seen a meaningful correction as well.
Absolutely. Well, that was it this week. We'll be back next week. And till then, if you have any questions, please put them down in the comments. Thank you for watching, everyone. And thank you, Pankaj, sir, for your time and experience.
Thank you, Sue.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.